Good morning, investors. You are now on KleverStock with me, Ainun Jaria, serving you the latest morning bell updates. Kicking it off with the opening bell updates on our local market. Bursa Malaysia opened lower on Friday, tracking Wall Street's overnight weakness as investors reassessed prospects for further rate cuts following cautious remarks from a Federal Reserve official. The Dow Jones Industrial Average fell 173.96 points, or 0.38%, to settle at 45,947.32. The S&P 500 dropped 33.25 points, or 0.50%, to 6,604.72, while the Nasdaq Composite slid 113.16 points, or 0.50%, to 22,384.70. At 9:06 a.m., the FBM KLCI slipped 2.71 points, or 0.17%, to 1,595.76 after opening 146 points lower at 1,597.01. The benchmark had struggled to hold above the 1,600 psychological level amid limited catalyst. Berjaya Research in Berhad noted that the near-term outlook is likely to remain flat, with both domestic and external drivers lacking ahead of the weekend. The research house projected a sideways trading trend supported by mainly by domestic institutions, while foreign funds are expected to continue selling for profit-taking. It added that the index could attempt to hover near the 1,600 mark as part of a base building pattern into the close of third quarter of 2025. Resistance levels are seen at 1,611 points and 1,620 points, while support lies at 1,585 points and 1,580 points. The firm also highlighted that lower lies appear due to consolidation after recent strong gains, with further upside expected to be more measured and prone to profit-taking. Rakuten Trade took a more optimistic stance, saying stronger market volumes indicated broader participation, with buying interest shifting to second liners and broader market counters. It expects the FBM KLCI to trade within the 1,595 to 1,610 range for the day. Among early movers, PPB Group declined 30 cents to 10 ringgit and 2 cents, Batukawan eased 16 cents to 18 ringgit and 76 cents. Malaysian Pacific Industries lost 16 cents to 29 ringgit and 44 cents, and Carlsberg fell 14 cents to 16 ringgit and 72 cents. On the upside, Nestle gained 48 cents to 97 ringgit and 8 cents. Petronas Dagangan rose 24 cents to 22 ringgit and 36 cents. LPI Capital added 18 cents to 14 ringgit and 28 cents, and Malayan Cement advanced 14 cents to 6 ringgit and 87 cents. And moving on to local currency updates. The ringgit eased against the US dollar at Friday's opening as the greenback strengthened on the back of the upbeat United States economic data. At 8:05 a.m., the local note stood weaker at 4.2200 or 4.2300 against the greenback, compared with Thursday's close of 4.2085 or 4.2120. SBI Asset Management Managing Director Stephen In said a sharp decline in U.S. weekly jobless claims to their lowest level since 2022 helped allay fears of a labor market downturn. Sentiment was further buoyed by stronger than expected revisions to second quarter gross domestic product GDP, which showed growth of 3.8%, the fastest pace in nearly 2 years, compared with the earlier estimate of 3.3%. These data points undercut concerns that President Donald Trump's trade and tariff policies would derail the U.S. economy, and instead it reinforced the view that the country remains on solid footing. Against this backdrop, the ringgit will likely face renewed selling pressure, with sentiment toward broader emerging markets leaning defensive until there is a clearer read on U.S. inflation and U.S. Federal Reserve policy into October. Bank Muhammad and Malaysia Berhad Chief Economist Dr. Muhammad Afzanizam Abdul Rashid added that the ringgit is expected to trade within a narrow band of 4 ringgit and 21 cents and to 4 ringgit and 22 cents today, given the strengthening of the US dollar index DXY, which climbed 0.43% to 97.687 points. At the opening, the ringgit was firmer against a basket of major currencies. It rose to 2.8146 or 2.8215 against the Japanese yen, strengthened to 4.9197 or 4.9313 versus the euro, and improved to 5.6257 or 5.6390 against the British pound. The local note was mixed against ASEAN currencies. It advanced to 3.2589 or 3.2669 versus the Singapore dollar, and appreciated to 13.0897 or 13.1285 against Thai baht. It, however, eased to 7.26 or 7.28 against the Philippine peso and was little changed at 251.9 or 252.6 against the Indonesian rupiah. Continuing with some local economy updates, Malaysia has reaffirmed its commitment to remain a consistent and reliable supplier of sustainable palm oil to India, said Plantation and Commodities Minister Dato Sri Johari Abdul Ghani at the Globe Oil India 2025 conference in Mumbai. He noted that palm oil continues to be India's most consumed edible oil, accounting for 34.2% or 9.7 million tons of the country's total edible oil consumption of 28.3 million tons. Johari said Malaysia remains a key trading partner for India, having exported 3.4 million tons of palm oil and palm-based products last year, valued at nearly 15 billion ringgit. He highlighted palm oil's strengths as an effective, competitive, and nutrition-rich edible oil, and stressed that Malaysian palm oil is produced through the Malaysian Sustainable Palm Oil MSPO certification system, which is recognized by the European Union as a credible sustainability framework. Going forward, he said, we must ensure that all edibles, oils, palm, soybean, rapeseed, sunflower, and others are produced sustainably because we have a responsibility to protect our climate and forests through continuous efforts against deforestation. India, with its 1.4 billion population, is central to this effort. No one shall overlook India's importance in global food security and supply. Ahead of Globe Oil, Johari joined a high-level dialogue with representatives of the Solvent Extractors Association of India, where he shared Malaysia's experience in managing food imports, strengthening food security, and navigating geopolitical challenges impacting global trade. He also reiterated Malaysia's readiness to support India's national mission on edible oils, oil palm through technical expertise, best practices, and collaboration in developing value-added palm oil products, including fortified palm oil, to help tackle nutritional challenges. The visit, Johari said, reinforces Malaysia's strategic focus on food security, sustainability, and long-term growth, while deepening bilateral trade and industry cooperation between Malaysia and India in the edible oil sector. And now moving on to corporate news update. Digital asset monetization will be central to Malaysia's ambition of raising the digital economy's contribution to 30% of gross domestic product GDP by 2030. This was said by Digital Minister Gobind Singh Deo. Speaking at the Luno Institutional Digital Asset Conference, Gobind emphasized that as more countries develop digital platforms to support transaction, Malaysia must seize the momentum to strengthen its digital asset ecosystem. The question of how we can monetize digital assets and how we can encourage greater use of them has become critical, he said, noting that constructive engagement between regulators and industry players is essential to shaping effective governance structures. He also highlighted that Malaysia's has regulatory frameworks under the Securities Commissions and Bank Negara Malaysia, with the Digital Ministry coordinating policies. This collaboration, Gobind said, is vital to building confidence and ensuring that digital assets can contribute meaningfully to the economy. Institutional interest, he added, is growing rapidly. If we understand where the digital economy is expected to be in the next 10 years and its GDP contribution, we will also understand the impact on industries and their concerns. Gobind also stressed the need for stronger infrastructure to drive digital transformation and build trust in digital assets, including stablecoins and blockchain applications. We are very focused on reaching our targets, and part of the effort is to ensure the right governance structures are in place to monetize digital assets effectively. And finally, wrapping up, we have major corporate developments and deals across Malaysia. Yenisted posted a net profit of 101 million ringgit in the second quarter and July 31st, 2025, about half the 203 million ringgit recorded in the same quarter last year, while earnings per share fell to 2.3% from 2.3 cents from 5.6 cents. Quarterly revenue was down to 1.36 billion ringgit in the second quarter financial year 2026 from 2.1 billion ringgit in the second quarter financial year 2025. And next, Kellington has secured a 108 million ringgit contract from a multinational medical device manufacturer in Penang. With completion slated for January 2027, the latest contract lifts its order book to 1.3 billion ringgit as at end June, with 299.9 million ringgit in new contracts secured in July and August. And next, we have Hiap Tech's fourth quarter and July 31st. Net profit fell sharply to 19.71 billion ringgit from 47.53 billion ringgit a year earlier, as revenue slipped to 342.74 million ringgit on lower selling prices and volumes. For the full year, net profit edged up to 109.12 million ringgit from 106.35 million ringgit, despite revenue declining to 1.44 billion ringgit from 1.68 billion ringgit. And TXCD has secured a contract from RNC Cergas Teguh Sdn Bhd to install and complete structure and architecture works for a project at Lorong Raja Uda 2, Kuala Lumpur, worth 11.24 million ringgit. And last but not least, Astro's net profit slipped to 16.39 million ringgit in the second quarter ended July 31st, 2025, from 54.71 million ringgit in the same quarter a year earlier. Revenue also declined to 638.21 million ringgit from 787.30 million ringgit previously, mainly due to lower subscription revenues, sales of programming rights, and advertising income. Well, that's a wrap of Morning Bell Updates with me, Ainun Jaria, on KleverStock. Thank you for choosing us, investors. Stay tuned for the next live, coming soon.